For anyone who has up to $250,000 in an FDIC insured bank account, there's protection to ensure that you don't lose your money. And it's per entity. So if you've got an account for yourself with 250, plus you and your wife have an account for an additional 250, that's 500K of coverage. So you could potentially get even more than the 250K of minimum insurance coverage through the FDIC.
Allan, every bank is not insured by the FDIC. Some of us have traditional banks, like you say, have various banks that you work with. Some of us have major banks that are insured by the FDIC. Others of us have these smaller banks, maybe community banks or credit unions. So tell me about some of these other banks, like a credit union or CFI.
Great. So credit unions are not covered by the FDIC, but they're covered by a similar protection program called the NCUA, the National Credit Union Administration. And there's similar protection. They will protect deposits up to $250,000. So even if it's not explicitly the FDIC, there is a similar program out there for credit unions.
The vast majority of banks, it sounds like, have these insurances.
That's right. And online banks also have these insurances as well. A lot of folks are putting their money in online banks today because you can get way better yields. They're not paying for the brick and mortar, costs of running a real bank or running a traditional bank. So you can check online to just see what are all the protections available. Even investment accounts. So investment accounts have a different level of protection. It's called SIPC, SIPC. And that's a protection that covers up to $500,000 in investment account assets. And that would come into play if a brokerage account were to fail. So just do your homework, be on your P's and Q's, and just double check which entity is protecting my account.